am so glad to say that it is a top that trade day. Let's bring in Alan Nuckman, the chief market strategist at bullseyeoption.com, and Phil Flynn, a Fox Business News contributor, our favorite players. Here we go, guys. Round number one in our trader game, Meme Dream. Is it over for the trading bromance that some of the Reddit traders had with these meme stocks? AMC, GameStop, way down this year.
So those stocks have come a long way down. They might be bad enough to buy, but I don't care what I trade. It's how I trade. And from a risk-reward standpoint, I kind of like where we stand with something like AMC, which has come back down to its $12 breakout. It's much more affordable than it was just a couple months ago. And also look at some of those ARK stocks that people follow, crypto, or even look at some of the cruise stocks have much better risk-reward after the sell-off. And everybody else wants to get out. I'm using that as a spot to look to get in.
Yeah, AMC, it's a big decision for me. I don't know whether I should buy a ticket to see a movie or buy a share of stock. Maybe I could do both. You know, there was a time where they were giving away free tickets, right? When you bought one. Now it's kind of in line with that. Listen, you know, these meme stocks are highly speculative, but they've democratized the market, right? And if you believe in these companies, you want to buy these on the dip. And at $12 for AMC, it's a gamble, but so is seeing some of the movies they're putting out these days.
Round number two, bad enough to buy. What are your favorite tech tumblers?
You know, everybody wanted to be in the tech sector. You know, a year ago, they couldn't get in. Prices were too high. You want to buy when there's blood on the streets, right? And there definitely has been blood on the streets. Are we concerned about a rising interest rate environment? We do, but we don't think tech is going to go away. So you want to look for challenges here. Now, you know, some of the FANG stocks, of course, that everybody couldn't afford are now becoming a lot more affordable. For example, Amazon, I think, is going to be a great one to buy in the break. Alphabet is another one that I like. These both start with A, by the way. So let me give you one with the T. Tesla. Tesla is one. It's very volatile, not for the faint of heart, but I still believe in Elon Musk and that technology. So that might be a good buy in this dip.
Yeah, and the dip is what we're seeing here. We've seen this many, many times before. But I want to point out one thing. You talked about raising interest rates. Yes, they're going to come from zero and they're going to rise probably to 1% by year's end, 2% by the end of next year, and then zero hikes after that. But guess what that does? All those companies you just mentioned have huge amounts of cash on their balance sheet. So now they're going to get a yield on that cash. That actually helps tech companies because tech companies have so much money, they don't know what to do with it. I like a couple of stocks. I like NVIDIA. I like Salesforce. And Citrix, I think, has already had a bottom base. So there are plenty of stocks that I think could snap back as they've done in the past. It's no guarantee they're going to do it again, though.
Round number three, hedge pledge. Billions of money was banked on huge crude hedges in the last few years. What's the downside?
You know, the problem is with some of these hedges, they hedge the prices too low. In fact, we've had some oil companies that locked in prices saying, hey, I can get $60 a barrel oil. I'm going to take it. Now, all of a sudden, we're at 80. And they're like, wait a second. I want out of these things. So some of these people are taking them out. One of the biggest hedges in the world, of course, was the Mexican oil hedge, right? And that may be coming to an end because right now Mexico is going to stop exporting oil. I know, is that crazy? But that has a real big impact on you, the U.S. consumer, because U.S. refineries love Mexican oil to produce gasoline. If they don't get it, they're going to have to get it from other places. Russia is a major source of that heavier oil. So is Canada. But if you don't get it from Mexico, you're going to have to look to other places that'll be more expensive, and that'll make your gas more expensive.
All right, I want to talk about the crude climb itself. There's been so many opportunities in a lot of these energy stocks. You've got Oxy, Halliburton, British Petroleum. A lot of these stocks we've mentioned over and over, Exxon, have had huge runs. So there is a way to make your money back if we're going to get higher prices. But guess what? It looks like we're going to try and get to 100 in crude oil. We were between 80 and 100 from 2010 to 2014. So these are just normalized prices. 150 is the all-time high. So we're 50% below the all-time high. So higher energy prices are a positive sign, in my opinion. They're a barometer of economic growth, and I look at that as very much bullish.
On to the bonus round question of the day. It's Girl Scout cookie season. There's a new treat in the lineup called Adventurefuls. What does it feature? Peanut butter, brownies, or nuts?
It's got to be brownies because there's already been peanut butter cookies. So and there's already peanut butter and other products. And I don't think they're going to branch out in that area. I'm going with the brownie because they're brownies.
He's nuts. No, I mean, I'm going with nuts. I'm sorry. Got that confused. I'll go with the nuts. But I'll tell you what, I quit them for a year. I saw my dealer on the street. I'm back in the cookies. I'm just saying.
It's winner chicken dinner for Alan. It's a brownie inspired cookies. I hear it's delicious. Thanks, guys. Business First AM continues right after this.